Welcome to MCA Accounting Series. In today's class, we'll be looking at a topic, the principal book or ledger. At the end of this class, students should be able to 1. Explain the meaning and uses of control account. 2. Identify sales ledger. 3. Prepare sales ledger control accounts. 4. Identify purchase ledger. 5. Prepare purchases ledger. Next, what is the ledger? The ledger is the final destination of all transactions in the subsidiary books. It is the most important book of accounts. It can be defined as a book which contains, in a classified and summarized form, a permanent record of all transactions. The ledger is used for the double entry bookkeeping. Divisions of the ledgers. The classification are as follows. A. Personal ledgers. These are the ledgers for creditors' accounts and debtors' accounts, e.g., purchases and sales ledgers. General ledgers. These are the ledgers for real and nominal accounts. For example, expenses account, income account, sales account, purchases account, and assets account. C. Private ledgers. These are the ledgers for capital and drawings account of the proprietor. The book is divided into separate sections called accounts, which may have one page or more. The main advantage of subdivision is to permit the clerks to attend concurrently to the various groups of accounts so that delay is avoided in posting and balancing them. D. We look at purchases or creditors' ledger. This ledger contains personal accounts of suppliers or creditors. E. Sales or debtors' ledger. This ledger contains personal accounts of customers or debtors. Lastly, on division of ledgers, we have nominal ledger. This ledger contains accounts of losses, expenses, income, and gains. Let's briefly do a recap of all the divisions of the ledger. So we said we have personal ledgers, general ledgers, private ledgers, purchases or creditors' ledgers, sales or debtors' ledger. We have the nominal ledger. There are basically 6 divisions of ledgers. Next, we look at the nature of ledgers. On the board is a draft of a ledger. The ledger is divided into 2 parts by a central line. The left side is the debit and the right side is the credit. The debit side is the side that receives values and the credit side is the side that gives value. So the ledger has columns for date, particulars, folio on the left and on the right side. The folios are numbered consecutively and make reference to be easier and quicker. Folio helps in easy and quicker identification of transactions. Definition of an account. An account can be defined as a record in a double entry system that is kept for each class of assets, liabilities, revenue, and expense. It should be noted that when entering a transaction in the ledger, that is, posting the ledger, always use the name of the account in the account you are posting. Next, let's look at types of classification of accounts. Accounts can be classified into 2. 1, we have personal accounts. 2, we have impersonal accounts. First, let's look at personal accounts. These are accounts for the names of individuals, firm, and business enterprises, e.g., Shegun account, Lagoon Nigerian Limited account, debtors and creditors accounts. Next, under the classification of accounts, we have impersonal accounts. These are accounts for properties, items of expenditures and income. It can also be divided into two, namely real accounts and nominal accounts. Real accounts. These are accounts for something we can see, touch, or move. The accounts for assets, for example, land and building accounts, machinery accounts, furniture and fittings accounts, etc. Nominal accounts. These are accounts for expenses incurred, income received, losses and gains, e.g., rent accounts, discount received accounts, discount allowed accounts, insurance and interest accounts. On the board is a graphical summary of the classification of accounts. Account is divided into two, the personal accounts and the impersonal accounts. The personal account is further divided into two, which is the accounts receivable and the accounts payable. And we said the personal accounts are for individuals, for firms, business enterprises, etc. Example of the accounts here are debtors accounts and creditors accounts. The impersonal accounts, we said that they are for properties, items of expenditures and income. And we said that they are further divided into two, which is the real accounts and the nominal accounts. And we said the real accounts for all possessions of all kinds, for all forms of assets, for things we can see, for things we can touch. For example, our land and building, furniture and fittings, motor vehicle, our assets. So for our nominal account is for expenses, for income, etc. Rules for debiting and crediting. The account which receives is debited with the value that comes into the account. The account which gives is credited with the value that goes out of the account. These rules can now be applied to the classes of accounts. Let's not forget the rule of double entry that says we should debit the receiver and credit the giver. It's exactly the same thing with what we treated here. So the account which receives is debited with the value that comes into the account, and the account which gives is credited with the value that goes out of the account. Lastly, on the principal book, let's look at the application of double entry system in the ledger. It's important for us that whenever we are faced with any transaction, we should ask ourselves three questions. 1. Which two books are affected? Give them names. What types of accounts are they? Classify them, e.g., real, personal, or nominal. Which one is to be debited and which is to be credited? If we follow these principles carefully, we should be able to apply them in solving questions. Students are advised to go back to questions and see how they can apply these principles in preparing ledgers.